Hi, Warriors. ECB Day, ECB live here in Face. How are you, Michael, Bran, Ryan, James, Ingmar, K-Man? Take it away, Blake.
Oh, that's it. We got 15 minutes, buddy.
All right.
But so you take it away. I'll come
uh,
back to me though. For sure. We
all
got
right.
GDP today too. PCE, a lot. Wait, not PCE. We have that PCE would be tomorrow. We have durable goods. Sorry. So yeah, a lot of
Okay.
data coming out today, but I'll come back.
All right. All
All right,
right.
cool.
So, here we are in the Euro. After yesterday's down day, this 950 looks important. Um, Gold still looks negative to me. A lot of the miners made new lows. They're called higher today. S&P's, some pressure here. I don't know if we got to. I know we got to, some of the 4,900 level. I don't know if that was the extension Blake was looking for. Just something for, we have
Yep.
had on the VIX one, two, three higher lows with the market making new all-time highs. So, it's constructive. It's sideways. With what the market did over the last several weeks, I don't know why we're not under 12. So people are buying a little bit of protection. Um, I just wanted to show Nat Gas, the Widowmaker took out everyone when it gapped down here, and we filled the gap. Had a nice, recovery so far. Um, on the daily, we diverged, but as you can see, with what the 4 hour didn't have much divergence, but the daily it's pretty glaring. So maybe we need some more retests here, but this looks a lot like the bonds did when they bottomed. You had your weekly low here, and then we made a lower low with divergence. So it looks a bit like that with only two drives. Yields, I don't know, they still look like they want higher levels. Held where they had to yesterday. Looks a lot like the dollar. So, are we going to try? This is close to 38, halfway is 440. That's my bet that we're going to 440, which would be about halfway back. And then after 440, get something like this from there would give us 320 into the spring. So that's what I'm looking for on yields. TLT, not quite at the 50% level. That would be 91.68, around 89. So there's more downside. But I think there should be a bond buy for maybe something like this. If the 10-year is going to repeat, perhaps the bond market does too. And, I'm still sitting tight, waiting for 107. This was interesting yesterday, guys, on cable. And if it rallies from here, it's got everybody. But, everyone was looking at this trend line. So we had a false breakout to clean out the stops over the prior day's high. Now we're back inside the channel, and EG looks like it's still trying. Needs some more follow through, but so far that 85.40 is holding, and I think that's pretty much covers it. Amazon, there's a lot of divergence in some of the Mag 7s. Amazon's a candidate. So we'll see. Amazon, unlike every other Mag 7, is not at new highs. In fact, 61.8 was 48. We never got up to the 78.6 is up here. So really, this is one of the weaker stocks in the Mag 7, where this could be vulnerable if we get any kind of correction in the market. And gold silver ratio, getting very close to retesting that breakout, but we have a real negative week. Okay, I know there's still a day left, but that's a negative week, and makes me think that we're a lot closer to the lows, and at least that silver may have made a low. They're trying to make a reversal week, but I haven't done anything about it. I'm just gonna sit. Still think there's a chance for the 21 area, get a 21 handle, and I think the whole key is going to be what yields do. So if we rally another quarter point in bips, that may pressure silver down again.
Hey,
So
Dale, we're seeing a bit of a reversal here in the Dow. The Dow's hitting new fresh lows
okay,
on the morning. So just a little
down
heads up.
128. Yeah, and look at the daily, Blake. I mean, this had the most glaring divergence out of all of them.
Yeah,
And
actually, funny you bring that up. I think my play of the day on the trade-off on Wednesday was the Dow and the divergent Dow. And it
uh,
is very glaring. It's very glaring.
uh,
Look, great minds think alike, right?
yeah,
Then when you were talking about the S&P yesterday, you can just look at the S&P futures. I think the ES's is probably the best look, and then look at the
okay,
daily candle. Yeah, I mean the
yeah,
daily candle, you can see it like just like that. That
right,
is some people saw it as a gravestone doji, but we lifted off the lows a little bit. It's a long upper shadow doji as we extended into that 161% extension, which we missed by, I don't know, 10 or 15 points.
okay,
But 10 or 15 points, Dale,
yeah,
close enough.
right,
Horseshoes and hand grenades around
right,
technical analysis. So
yeah,
if you get really close to that golden fib as we did, and you see some sellers step in, everybody's trying to sell in front of that level. So yesterday's daily candle was not pretty. I wouldn't go as far to say that this bull market's over. No, but we need to really sustain these gains. If we start to see a reversal by the next 2 days, we have two big days today. We have between earnings, all the earnings that are left to come out. You have big economic data today with GDP, uh, and then PCE tomorrow. That's a lot that can happen in the next 24 hours. So
yeah. And Bitcoin, which, I also, I use it as a gauge of liquidity. And, so we've come off quite a bit. Um, that would argue for that we're getting close to where we should have a correction in S&Ps. But between the S&Ps and the Dow, the technical picture, the Dow was the last one to make new all-time highs. And then the Russell yesterday, Blake, we're getting a failing rally here. We bounced from 88, but it failed yesterday. So we're making lower highs in the Russell.
yeah, so some scary stuff. Hey, Dale, do you mind if I take things over since we got the ECB and
I was
rate
ready eight
decision a few?
minutes ago.
Okay, all right.
All right, man. Go ahead.
I'll take over from here then.
All right.
And I just want to say good morning, everybody. Welcome, Ryan and K-Man, to the show. We're going to welcome them in. Good morning, guys.
Yeah. Hey,
Morning.
team.
Hiya, hiya.
Good morning, Ryan. What's going on? What is your opinion of Christine Lagarde? And jokes aside, because I know they're going to come out, besides her tan that you're looking at. I mean, rate expectations have kind of got pushed back. People were thinking, oh, it's going to be in the spring, and now it's going to be, summer, and there's no chance for the spring, or at least those odds have been moving away.
Yeah.
Her comments in Davos, this last week were they shouldn't be so offbeat from what we got, last weekend. So today, is she going to come out, a little bit more dovish, or is she going to continue to hang on to this more hawkish rhetoric and try to push expectations out towards the summer? What do you think?
In theory, she should come out along the same lines as the rest of them and pushing back on any early rate cuts. But she's obviously going to acknowledge the economy as well. So the price move is going to come on if she signals big worries on the economy that may lead to earlier cuts. Then that's going to be dovish. If it's higher for longer, but we're going to keep rates up because inflation isn't coming down. We're going to ignore the economy at the moment. Then that's going to be seen as non-dovish, more towards a hawkish side. The biggest price risk is if she's dovish after the markets reprice the reprice of expectations. If she's now more dovish, then you're going to have a big move to the downside in the euro. But I think it's going to be a pushback. Any decent pop in the euro could see us get up to decent levels, edges of ranges, at a push 110 maybe, 110.5 in euro dollar, maybe up to into the 86s for euro sterling. Anything like that, I think, will be a rally sell, particularly in euro sterling.
It's interesting you say that. And first of all, yesterday really screwed some of the bears in the euro. It pushed above the 109.10, which was really in focus over the last week. And we broke above that yesterday, failed. Now, what's interesting is, I was looking for a breakout above 109.10 and hoping we'd challenge the underside of this trend line. Now, what you just mapped out would really put us at the underside of this broken channel, probably around, I would venture to guess, and I'm gonna take this off as soon as I'm done with it. It's about a 50% retracement of this entire move. I think that's a very realistic expectation of the euro on a break higher. Now, one of the other things I wanted to just point out technically, if you guys haven't seen this already, this is what we call a megaphone pattern. Now, a megaphone pattern is one of those that should prohibit you from chasing the market. First of all, you shouldn't be chasing the market higher or lower, but even on a day like today, when you have some reason to do that, this pattern really, until we break out of it, it really should prohibit you from going, oh shit, euro's bullish, because it's bullish, and then all of a sudden you get a failure right back into the megaphone, or vice versa. You can get a sell off, and then you hit this 161% extension down here, and then all of a sudden you get a rip back, and you go, what the hell happened? Megaphone patterns, they suck. They're these expanding patterns. They're frustrating to trade. I just want everybody to see what's there. So when you hear Ryan saying a failure up a topside failure, that could be it. I'm sorry, Ryan, I hate to cut you off really quick. K-Man, we got like 2 minutes, minute and a half before this happens. What's up with you, and what are you thinking right now?
If there's anything else that comes out of this meeting, then what we heard in between the December meeting, all of the ECB members, 5 or 6 times Lagarde in Davos, it's going to be a real surprise. I'm expecting absolutely zero from this meeting.
What is the Lagarde rule that they're condemning? The staff is condemning. What's that about?
The question will come up, and that's probably going to be making for a very good popcorn moment. But
okay.
What is it going to change? I mean, if she really would be, I don't know, on her way out, wouldn't the euro then be 200 points lower or 300 higher? I don't know. It's actually difficult to pick a side if she would go. But no, I'm actually, well, for once, I'm expecting zero from this meeting.
All right. Well, we have the press conference is going to be more important. That's a half an hour from now. So, you guys should be in the ForexAnalytix chat room, because that's probably where we're going to see, at least if we're going to get volatility, it's going to be there, because obviously they're not moving on rates today. So this reaction right now should be very, very, very limited. Although, we'll get staff projections. They should come in here right around this time too, shouldn't they? Anyway, let's keep an eye on it.
No, they were in December.
What's that?
The last staff projections were December.
Oh, okay.
Yeah.
All right.
No,
So let's just focus on what we got. I'll just keep on the 5-minute chart here in the euro. We can look for headlines over here on Live Squawk. Should be upcoming here in just a few seconds. So probably not going to get a big reaction, but we'll get prepared for the GDP data here in a second. So
unchanged.
yeah. Oh my God, look at the euro. I'm joking.
Oh,
Gone 4 pips. It's moved 4 pips.
What? Well, oh my God. What's happened? Nothing. All right. So we're going to just pay attention to a little bit of price action as we go through this. Now, again, the press conference in 15 minutes, that's where you're going to see the action. You know, everybody's going to be looking at, you know, what color her skin is and, you know, what kind of bag she's carrying. So we'll wait on that. Hey, what in the meantime, really quick, since I've got K-Man, you probably were paying attention for the Norges Central Bank today. I was obviously asleep, but what happened is the US dollar Norwegian krona hit some pretty key support here at 1040. What drove down that price, and why did we get a reaction from there?
The Norges Bank just leaving the door open for everything. They say that they expect the rate to stay here for some time, a bit same as all the other central banks, drove the Norwegian krona just slightly higher. But then there was a bit of a funny line in there saying that they think the Norwegian kroner is a bit stronger than expected. It did not react at all for an hour and a half, and it's only in the last half hour that the dollar Norway or Norwegian kroner just came back to the levels where it was before the Norges Bank. There's absolutely no fresh news in there either from their side. And by the way, sorry, South African Reserve Bank also kept the rates unchanged right now, and the
I was just going to ask you about that. Yep.
That's absolutely a standstill as well.
Okay, and you know, I played the rand yesterday off of this level right here, and I barely made any money. It was like one of those like, okay, well, I'll just get out of it. I thought we'd get a bigger reaction. But one of the things about the South African rand, and I have to point this out, guys, because of where we're at, you know, and emerging market currencies just in general. I mean, you've seen the dollar Mexican peso obviously come down. You know, this is a huge carry. I mean, for you to buy rand, sell dollars, and carry it, I mean, you're making, you know, truck ton of money. The problem is the rate's been moving against you all the while we've seen this you know, move higher in S&Ps. What theoretically we should be at right now, if I had to, you know, guess, we should be somewhere down here. We're not. We should be, but we're not. What happens, and I'm going to ask you this, K-Man, what happens if let's just, you know, say I'm right here in this situation, but not saying I'm going to be, but let's say the S&P fails up here. You know, we're in this longer term range. We try to break out. We don't break out. We come back down, which I think is going to happen. But that doesn't mean it's going to happen. I just think it's going to happen. But let's say that does come down. What happens to the rand here? I mean, does the rand just like blast off into new all-time highs?
It could do because I think we are. The market doesn't expect rate cuts before the second half of this year, but I've been re-listening to an interview that the SRB governor gave in Davos, and he started to sound a little less hawkish to me. Also, go back on your original chart, the lower time frame of that dollar rand, and just draw a line from start of 2024 to where start of 2024, start of 2024.
Well, there was right
that one
here. Yep.
Yeah, and then you draw the line, and it's coming in around that 1880 as well.
Yeah. You know, and Charles says the ZAR is an interest rate differential. Yes, it is, but it's not acting the way it should. Theoretically,
no.
With how wide it is, we should be a lot lower, and we're not. And that's the point I'm trying to make here. Dimitri also mentioned about elections, and thanks AJ about the dollar Canadian. Yeah, that dollar CAD's been it's been quite a trader. Anyway, we got about 10 minutes until the data comes out. Dale, I'm gonna come to you really quick. How do you feel about equities here? You know, I am in the camp that we are in a bullish breakout, but I am a little concerned right now with all the divergences that I'm seeing in the markets. Therefore, even though I don't want to be short at this moment, risk necessarily, I am a little nervous here. You gotta respect the fact that we're breaking out and it's a bullish breakout, but I throw in the buts. How about you? How are you feeling here?
I think that we could have a reaction, but if I'm right, intermediate term about the dollar, that the dollar is going to sell off after getting up towards 105. That's not exactly risk off. So, the market is, I would say that you have to wait. If you believe 4,800 was an important level, trading back under that breakout would be your first sign that something's wrong. So I'm using the
Yeah, and but
4,800.
then I'm gonna push back on your dollar analysis and thesis that if for some reason we break back below 4,800, which I do believe is going to happen. Again, what I believe and what happens doesn't mean anything. We gotta see how it plays out, because obviously it is breaking out. But if for some reason we fail up here, I wouldn't want to be short the dollar. I wouldn't want to be short the VIX. I wouldn't want to be short the dollar. And the dollar, I think if it could
I don't want
extend
to
way
be short
further
the
than.
dollar until it gets up towards 105.
Yeah, but if we fail in equities,
It'll
and
go
let's
to
say the
105.
S&P fails below 4,800, and next thing you know, we go into the rest of the earnings season in the spring, economic data starts to weaken a little bit, which I think is my base case. Next thing you know, we're trading down at 4,500 in the S&P. This dollar index is going to be trading closer to 106, or quite potentially even higher. So that's where, and I think this is where the US exceptionalism is going to stand out, because you're going to see economic data in Europe and everywhere else start to really roll over, and the US jobs picture is probably going to be the last one to go. Anyway, just some thoughts. I guess what I just wanted to push back a little bit on the dollar, because I'm not bearish the dollar yet, and man, I'll tell you, the reaction yesterday from the neckline support was pretty telling. We got a nice little reaction down here. Ryan, let me go back to you, because we just have a few minutes. Today we got US GDP coming out. We have personal consumption, I believe. No, durable goods orders. That's all
We've got the
tomorrow.
quarterly PCE,
Yeah.
but the monthly one is tomorrow.
Jobless claims, all this other
Forget
garbage.
GDP. Unless GDP is a real huge variation, it's the 8th time of having a go at Q4 GDP. We're in Q1 now. Forget it. Even the PCE numbers, I'd forget to a large degree, unless there is a huge change.
Okay.
But yeah, durable goods. We know jobless claims was much better last week, so let's see if that continues, or is it a bit of early New Year shenanigans? Just people coming back from the holidays. So keep an eye on that one, and later on, new home sales as well for December. So yeah, plenty of data to get markets rocking and rolling.
All right. Cayman, I'm going to come back to you really quick. I started buying the dollar Swiss yesterday, and I've been when I've been in the trades room, what I haven't been doing is I haven't been paying attention to what everybody else has been doing, because it's been so busy, like literally the last 48 hours. So like I put in my trades, and then I completely, go back over to the general chat room, and start talking, and, getting back into the groove over here. Did you play the Swiss short, the dollar Swiss, take advantage of this, whether through the dollar Swiss or whether through the Euro Swiss? Did you take advantage of this dip here yesterday when we dipped down here?
You're in Euro Swiss, right?
I'm in Euro Swiss, but I bought dollar Swiss yesterday too.
Oh, you bought dollar Swiss as well? Oh, good.
Yep.
Yeah, I'm well, I've got my dollar Swiss calls, right? They still run until for another five months. So
oh, nice.
Yeah, so the first one was at 85.5. That one I sold out for profit. Now I've got an 87, which I started to hedge when we went above 87. And yesterday I bought, well, virtually all, almost all my hedges back in the low 86s. So yeah, I'm still on the long dollar Swiss train in that way. I think it's still valid. Jordan gave us a bit of a hope as well on his last intervention. So yeah, it's good. It's a nice little channel, right? That we had since the end of the year there.
Yeah, and I was waiting for that correction, and all last week I was like so irritated that it was just grinding higher, and I'm like, give me an opportunity. Yesterday it just showed itself. When I woke up in the morning yesterday morning, about what was I guess about 27 hours ago, the dollar was getting smashed. And I'm like, yes, bring it, and we finally dipped to that channel and respected the shit out of it. So I was wondering if you picked it up as well. I didn't. Like I said, I've been focusing too much on the trades room. But for those of you that want to, just remember in here we have like trades room of not only like you can see K-Man had a fill there in the euro, and what we're all kind of trading and what we're getting in and out of. So yeah, just take a look and jump in the ForexAnalytix chat room so you kind of know what we're doing. And I always have to say this. It's not necessarily, I don't like to mirror people, but I have a lot of respect for actually pretty much every trader that's in our chat room, because I know how they trade. So if somebody's doing something and and I might be doing the opposite, I'll have to stop and think about it and say, why am I long here? Or why am I short? Does it still make sense? So-and-so is trading, but he or she is on the opposite side of me. Am I comfortable doing that still? And that's what makes me think. And I think that's the best thing about being in a trades room and in a chat room, just in general, is understanding what everybody's mindset is. So take advantage of it in the ForexAnalytix community. It's one of the best things to be doing. All right, we got a couple of minutes till data. Ryan, any last minute thoughts as we go into this data, what you're looking at right at this moment in time? I'm going to pull up.
No, I'm just looking at seeing if we get any range moves over the presser, hit the ranges. I'm not looking for, I don't think anything breaks today. So if we get any moves to any of the edges, that's where I'm going to be plonking my bait.
So that dollar yen, plunged through 147 yesterday. We recovered, but you notice where we came back to. We just came back to the underside of the broken channel, which is this red, and that's the 50 DMA, but it has nothing to do with the intraday charts. It's a 50 DMA on a daily chart. It's just a 50 period moving average. But you can see how we just challenged the underside of that. We pushed the stops and we came right back up. You have any thoughts on the dollar yen here?
Yep, bang in the middle. Nothing to do here. I want to see what happens at 147 and up towards those 148 high, 147s, 148 highs.
Got it. K-Man, a lot of auctions this week with Treasury. Anything you're staring at in particular before we go into this data?
For the rest of the week, sorry, yesterday the 5-year disappointed. We do have a sevens today. We do have a sevens today, and we will have to monitor that. And then next week, 29th and the 31st, is going to be the big one, because Treasury announces the new plans for what's coming afterwards.
Yeah, it's the quarterly.
That's always going to be a market mover.
Yeah, and that is, we were talking about that on the trade-off this week, the 29th and the 30th. So Monday, or 31st. So Monday and then Wednesday. So big news coming out on Treasury and what they're doing. And this could very, very much move the market, as K-Man's saying. Very good. But as far as intraday, anything that you're thinking of intraday?
Oh, no, not really. Depending on what Lagarde said, perhaps keep an eye on those euro crosses. A couple could be interesting. The one is the euro Swiss. The other one is still the euro sterling, I think, which is finding support around that 85, 40, 50. but equally has a bit of a trouble to get over those 60, 65 now. So I'm wondering whether those offers are not coming down. But yeah, keep an eye on those. Two crosses could be interesting. Yeah.
All right. Thank you. Here we go.
440
Seconds away.
10-year, 440 10-year, and then buy the world.
Woo! Look at you. 440 10-year. Dollar yen is whipping
Durables
around.
better by a touch.
Claims going up.
Yeah, jobless claims.
149 yen, and then sell it.
It's all thereabouts in line.
Yeah. It
GDP.
is. I mean, he's got a little spike up in dollar yen. Should take us back up to 148-ish.
GDP was better, 3.3% versus 2.0 expected. So that was quite a shift up. But then last was 4.9%. So yeah, bit of an improvement. Soft landing stuff.
Soft landing. And you'll look at stocks. I mean, stocks are holding up pretty well. You know, you can see the S&P right here. Excuse me. Yields coming off a bit. Dollar yen's just kind of sitting there. Euro whipping around, but we got to wait for the ECB press conference in 15 minutes. And you know what? I'm gonna be quiet now because we have Mish, and she's much easier on the eyes than Dale. So her camera happens to be on. So I'm gonna let you all go. Thanks, K-Man. Thanks, Ryan, for your input today. We'll see the rest of you guys in the ForexAnalytix chat room for the ECB press conference. And I'll see you guys on the morning edge in about 45 minutes. Dale, it's to you. And Mish, welcome.
Thank you. Good morning.
Thank you, Blake. Thank you, team.
Thanks,
Mish
guys.
for Fed chairman. I'm starting a campaign. Are you interested in the job? Fed chairman? Huh?
Fed chairman. Oh my God. No. President of the United States and Fed chairman. No.
Okay. All right. So then it's great to have you back. Happy New Year, Michelle.
Same to you. Can I ask you a sort of a weird question? Is it better the lighting like the way it is now, or if I put this on?
Either's fine.
Okay.
That's good.
That's good. Okay. It's actually better.
That's good. You look comfortable there. Listen, here we go again, huh? Another year of doing this, Michelle. Does it ever feel like like Groundhog Day to you, or deja vu, or does it always seem fresh?
You know,
another year.
I'd say maybe elements of both. Things repeat or rhyme, as they say, for sure. And so you look at certain scenarios and you say, yes, I remember when that happened back in the day. And yet also the way things work together, and obviously how the world is changing, and particularly as we're looking at AI explosion, that's all fresh and new. So that's what makes this so much fun, is that it never really gets boring.
Yeah, it's probably the best jigsaw puzzle that you could work on a daily basis, and we don't have to do brain exercises to stay sharp. All you have to do is really try and figure out what's happening here. So you have any themes or narratives for 2024 that have begun to play out or are about to play out?
Well, I came in fact, I mean, this on the very first day of the year, I happened to go on Fox Business with Cheryl Cassell. And she wanted, I had sent her a bunch of notes, my 17 predictions, and she picked out 2 to talk about. So the first one was that EVs would be the worst place to invest in this year. And so that's certainly, that has come to pass.
Tesla took out 200 yesterday. It's October lows. Is that because you saw that China was going to be flooding the market because of desperate need for business?
Well, that was definitely a reason. Obviously, BYD being a big competitor, but it was really more from observation that infrastructure just could not really keep up and support the number of EVs out there. And then you get something like a weather event or a power down, and now you can't charge the car. So I think people that have EVs and rushed into it were starting to feel a bit disappointed. Unless you're like a local driver and you can plug in your garage, and even then, if there's a power out that lasts. And then I thought, the Hertz news came out. They're not moving used cars in EVs. And I just put it all together and I thought, this was such a fun run, but reality was setting in. And that doesn't mean that EVs won't come back. I think they will. But, we were very careful. We went from a gas car to a hybrid for that reason, because we wanted to be able to drive locally on a battery, but we knew that as soon as we leave Santa Fe and Albuquerque, New Mexico, where we live, forget it. There's nothing. There's desert. So, I think that mindset, even in people who live in much more populated areas, has been prevalent. So, I'd like to see Tesla maybe get down around 150. I think that would be a compelling buy. I mean, the other thing that came out of this is that Kathy Wood got all famous again because, I'm just buying Tesla, and I'm just buying Bitcoin, Bitcoin, Bitcoin. And so that brings me to the second thing, was that we knew that this was a buy into the spot ETF on Bitcoin, and then it would come off. And we were actually saying, and I say we because I have to give credit where credit's due. Holden Milstein, who is our crypto guy, was saying 47,000, then down to about 37, 38,000. And that's exactly what's happened. But he says we're in accumulation overall, and we're going into the halving. So he's looking for another run. But nonetheless, those were how we came in. Now, that has nothing to do with equities. In terms of equities, I've been kind of talking about this vanity trade where the consumer might switch from going out and traveling. And we're certainly seeing that that's happening as Expedia has come off a lot. And airlines have come off. Obviously, forget about Boeing. That's a separate story. But and people are starting to take those diet drugs and look more into fashion and skincare and makeup. And so some of those stocks have done really well. So I was kind of focused on that. Obviously, I love Microsoft because I'm really interested in getting up to speed in Copilot. But it's not quite there yet, and but yet that stock is amazing. But that's not my thing. So really, if you really want to know what I'm looking at, is that overlay of the 70s to now, and how beautifully matched it is, where we had 75 to 77 CPI come crashing down from 2022 to 2024, CPI come crashing down. And what could be the event that turns this back to 1977, where everything started to go up, and of course screaming up until we saw the Volcker thing. And that's what I'm looking for. So I heard you talk about a few things that are interesting to me. One would be the dollar. Now, even though there's no real historical, empirical data that the dollar versus gold or commodities has a given relationship that's firm. I mean, obviously a super strong dollar is one thing, but we're ranging in the dollar right now. So I'm watching that. I'm watching silver to gold ratio. Silver actually started picking up against gold. I'm watching the gold miners, which are struggling to stay here, but if they can catch a bid. And of course, my third thing is sugar. And this has been my big proof of why people think the super cycle's over, and it's not, because people don't know that you can have 40% drops, 20% rises, and then another 10% drop. I mean, volatility is inherent to a super cycle. So I haven't completely taken my mind off of that. And of course, oil being the X factor.
Okay, so you bring up the miners, and they are really, the valuations of miners are, it's amazing to me, actually. So I mean, you look at something like Newmont. I know they've had trouble with their mines, but we're on the verge of testing not weekly, monthly, but yearly lows on Newmont. Here's Newmont. You have to go back to the COVID lows on a lot of these miners to look for support, which is all the way back here, right? So
Right, but take a look at GDX, Dale, because it's kind of like saying, well, sugar's up,
There you
why
go.
not Hershey? Well, Hershey's
Yeah.
gotten beaten up, while sugar is trading over 24 cents a pound right now.
Yeah.
Yeah, so that's why I like to look at the GDX instead. And look at that. I mean, you have some interesting lines drawn there. So to me, this is trying to base out. And the momentum is shifting as well from negative momentum to more positive momentum. I mean, clearly we want to see some type of price confirmation here, but I am actually out of gold. Believe it or not, I have not been out of gold for 2 years, but I got out of gold right around these levels because it's just ranging, and I'll get back in if it either crashes or breaks out. But GDX and silver are kind of what I've gotten into here a little bit, nibbling.
Yeah, here's what you're talking about. So we had this big breakout over 87.5, kept testing it. And we're putting in a pretty nice reversal week in the gold silver ratio. So
And we
I think you're
know,
on. Yeah.
right there. And Dale, to go to your original question about, has this been deja vu?
Yeah.
Silver
Looks
gold
like
ratio
this.
is extremely important. And most people who were born after 1990 don't know about that.
Yeah. So yeah, because you need really this to be trending down to have a true bull market in precious metals and silver to lead. And silver did. I mean, it's had a very interesting week. I thought that we were breaking down under 22.5 until the next day it closed right back there. So
And I got long at like 22.75.
okay.
And that's the thing. I mean, as we well know, there's opinions, and then there's making a trade. And
Right.
I've really wanted to be we have quant models. So our quant models have been all about all the trend strength indicators, and obviously getting into even leverage semiconductors and AMD and Qs and all of that. But as a discretionary trader, I have been much more interested in having a balance between commodities and equities right now. And so that's kind of where I'm at. That's why I'm in oil. I have almost gotten out of it like 10 times. When it starts to come off, I'm like, it's going nowhere. And the same thing now with silver. I finally, like I said, got out of gold because I'm thinking to myself exactly what you just said. I know where I'm wrong. So position size where it won't hurt. If you're right, add. And that's what I would do. And if I'm wrong, I'm out. There's no ego involved. It's methodical, strategic. This is the decades of experience. I sleep at night. I don't worry about it. And that's that. So we'll see. And we'll see if this is not the start of, especially with the numbers that came out today. I think it kind of supports the idea of the Fed lowering rates in March, right? Because, right, I mean, I haven't studied them because I've been hanging out with you, but I think PCE was pretty low. And but these are lagging indicators. And that's what I always like to tell people is, yeah, I mean, we already kind of know gas prices had come up, but they're coming back up again. At least I can see it at the gas stations here in town.
Bonds, Michelle. I mean, we had a tremendous run in TLT from what was it, 82 to 100. We pulled back to 93. Is this a break to buy in the bonds here? Halfway back, maybe at 91 or so.
Well, I kind of was thinking one of my predictions was that bonds would be in a range from 92 to 102. So we kind of got close to that 92 level, not quite there.
Yeah.
And so here we are, like just a little bit off the lows. So if you really believe, see, the thing about the bonds is that we're still outside of the wisdom of 60/40 portfolio, right? I mean, we're not there. We're not back there yet.
No.
And so if we're going to look at bonds as a flight to safety, we don't need it, right?
It's still a risk on. It's a risk on asset. It's changed to a third world bond market.
Exactly. That's very astute to say it like that, because that's a better way of what I was trying to say. So to me, the way I would be interested in getting back into something like the long bonds, that's what I'm saying, the 92 to 102, would be if I really thought the environment was going to go more towards a stagflationary, or the super cycle was going to set in, because then the Fed is really stuck and they would have to lower rates, and that would goose the TLTs. Until that kind of event, even with the charts, I just look at it as range bound, and to me, not where I'd rather be. I still think fixed income is not a bad place to be if you can lock in anywhere from 5, 6 to 8%, depending on the type of bond, part of your portfolio, and kind of stay away from the long bonds for now.
Okay, so how about grains, Michelle? I mean, they've been, so many false starts. Maybe getting another, attempt around this $12 level in beans. I know you've been paying attention to them because, I get your free updates in my email, and everyone should sign up to get Mish's stuff, and to give you the flavor of what she does, and you could take it to the paywall level after that, but no risk in checking out what she's keeping her eye on. So you put out some excellent stuff for free, Mish.
Well, thank you. And I do that because, well, because we've been in this business for so long, and yes, so obviously traders, and we have tools and all kinds of things that people can buy. But at the end of the day, I'm a teacher, and I've always been a teacher.
Okay.
I love teaching. And so this is just a short little bit narrative into, okay,
Yeah.
what am I looking at right now to help people? And that's why we do this show and spaces and go on media. So I feel at this point very comfortable in not worrying about free content. In fact, if anything, I encourage and think the community of people like us are extremely generous in nature, because there is a lot of great stuff out there. Yeah, I hope you enjoy what I do. I try to switch between my economic modern family, and we could talk about that in a moment, and
Okay.
commodities. I kind of go both ways. So to answer your question on grains, DBI had that split, and it went from like 22. It closed at multi-month highs, and then
Yeah.
had the split, and it crashed back down, based out, and now has been coming back up again. Obviously, softs are a part of it, and coffee had made a move, and sugar made a move, and obviously cocoa, that's been the big story, live cattle. So yeah, I mean, the grains haven't been as interesting. Part of that story is China, because China hasn't been buying as much, but then we also have major weather problems with drought and El Nino. And I mean, one of the reasons why sugar's up so much is because India has not been able to produce. Thailand has not been able to produce. They've actually curtailed their exporting of these. And that's what could happen with the grain markets. Potentially, we have growing season right now in the US.
Yeah.
Anything screws up. Am I in the grain?
There's not a lot of carryover, is there?
Right. And that's the thing, is that, we're still coming back from the whole COVID thing in a sense. Now, grains can hit the ground much better than, say, some of the other type of commodities like coffee. Those trees, I mean, they basically yield one time a year, and if there's a frost, they're destroyed. But we're in summer now in Brazil, and they're having a drought, and that's why coffee prices have gone up. So you got to understand, when you're playing these grains and commodities, it doesn't in terms of the soft commodities, you're not necessarily playing the inflation narrative the way you would be looking at, let's say, the metals. Back in the late 70s, not every commodity rallied. So I'm really watching more than the grains right now. Obviously sugar, because I think sugar is a great barometer for social unrest. It's in everything. So, food prices will have to go up. That's going to be inflationary. Wheat, corn, soybeans. But I'm also looking at copper, steel, obviously oil, as I mentioned before, that silver, gold. I mean, even lumber started coming back up. That's another interesting indicator. Clearly, the people who have been looking for recession, another mixed number, because GDP is lower, right? So what, isn't it 2 quarters lower GDP equals recession? But yet that happened a couple of years ago, and everyone went, no recession. So, this is what makes the game exciting, because the rules change all the time, and people get frustrated by that, but you got to kind of be with the times.
Natural gas had a huge gap down, the Widowmaker. I don't know if you let your husband trade that, but anyway, it gapped down, filled the gap yesterday,
Mhm.
and God, it's so cheap.
Yeah, what, like 225 or something
Yeah,
like that?
yeah,
Yeah.
yeah.
Here's another example. People have long memories and short memories at the same time. So everybody thinks because it went nuts in 2021, and that was my big call, on national TV when I said to Charles Payne, oh, natural gas is going to go much higher. He goes, wow, no, that's the widow man. I wouldn't touch that. And then, but now I don't feel that way. I think natural gas, there's a lot of obviously gas around. There's also, I'm reading, deals that are being made under the table with Russia and pipelines and things like that. If it got, say, through 275, through 3, hung out there, then I might be more interested. But it's just another one of those instruments that's just stuck in a range and not really.
3 big level. Failed there a few times
Yeah.
psychologically.
So why go somewhere until there's a reason to go there?
I know you don't like to get political, but we have to, because it's an election year.
Oh,
and
yeah,
I'm not saying
absolutely.
you have to stake out a side, but as a trader,
It's really hard to take a side right now. You could make cases for both sides in terms of,
or how about cases for no sides?
Or no sides, exactly. I try to keep politics. My favorite thing to say is, 14 years on the Commodities Exchange. I stood shoulder to shoulder with men for all that time, and I could tell you that I didn't know how any of them voted. I really didn't. We
Okay.
didn't discuss it.
Didn't
So
matter.
it didn't matter. But
Only out trades mattered.
But in terms of how this might impact the market,
Yeah.
I don't know. I mean, on one level, look at people obviously hate Biden, but yeah, here we are at all-time highs. Inflation has come off. Okay, our growth is stunted, but it's been stunted for a while. We're in wars, but yet it's not really affecting us Americans on our own soil, like it did in 9/11. Things are not that bad. So I wonder the middle America, what they're going to go to the voting thing in November if all things stay the same and say, you know what, things aren't so bad. Why do I want now somebody who really can potentially be much more in terms of mixing it up when it comes, especially foreign policy, et cetera. So I don't know. I just can't believe that we're a country that has so many brilliant minds in it, and this is who we're serving up. That's about as political I'm going to get, and I will obviously watch things as they progress. A Trump presidency, I would assume, could be inflationary, even more inflationary, because he likes a softer dollar, he likes lower interest rates,
tax cuts permanent,
tax cuts, government spending. I mean, the whole notion that only Democrats spend money is kind of a fallacy. We'll see.
Don't you think how the market's trading, and maybe the market is putting on a great show the last 3 months and maybe through the first quarter, and what the market is doing this summer has never been more important as far as an outcome of an election?
I think, again, another astute observation, because we have these calendar ranges that we like to look at. They're 6 months.
First 5 days?
Well, it's the first 10 trading days, sets
Okay.
January calendar range. And it's really interesting if you look and see what's above the calendar range, what's stuck in the middle, all these instruments we're talking about, and what might be breaking down. Nothing has really actually broken down except for Tesla. Tesla is definitely now in a downtrend, no doubt about it. Whereas, you look at something like NVIDIA, and that's obviously broken out with semiconductors. So that sets a trend for 6 months. That doesn't mean we can't see up and down, but essentially that 6-month calendar range high could become support, or last July's calendar range high, which would be a little bit lower, could become support. But that's your support area. July, it resets, and then we can see how things line up from the January 6 months and what is projected for the next 6 months from July on. And yes, and it could be that if you put those together, you'll really have a much better idea of what the market is feeling about the election and the new or incumbent administration that might be coming in.
Okay, guys, I don't think that it's ever been more important, Michelle, to see where markets are trading. It's amazing that usually the markets wait for the election for it to be important, but I don't think there's any waiting around anymore. The
Yeah, for
market will
anything.
vote. Yeah,
Right. I mean, listen, we all know AI is the thing and will continue to be the thing. But yet the move in AI and anticipation of how much it's going to control all of our lives probably has been greater than the reality of where we are at right now. I mean, that doesn't mean it can't go higher. There are people who think that NVIDIA is still cheap based on PE
yeah,
if you look at certain formulas. So, I'm a nervous Nelly buying incredible strength. That's just not my style, unless
yeah,
it's a commodity strength, because now we're not talking about PEs, we're talking about emotional plays. But when it comes to equities, I like to look at things that I think might be emerging, where I have a risk that I can wrap my head around, as opposed to, I'm dying to buy Microsoft, but I'm like, should I risk to under 395? And then I mean, probably the answer is yes, but I haven't done it yet. So,
all right. Well, it's been great having you and your pup on camera today.
oh, is my
And
dog in the room with me? Oh, there he is. Yes, Raul.
yes, yeah, and he's very relaxed with every position that you have on, right? So, he'd be bugging you if he wasn't. Mish, always great to have you, and I want to thank you for coming on to F.A.C.E all these years and edifying the community, and really appreciate your giving spirit to come out here and talk to us and share your outlooks for half an hour every quarter.
Oh,
I
thank
want
you
to
so
thank
much.
you.
It's really great to be on. I set my clock to
All
it.
right. So, Mish, best place for people to go is to your website. They can follow you on X at Market Minute.
Yeah,
And
marketgauge.com is the website. Market Minute is my X handle.
right.
I'm all over the place. So yeah, it's not, if you want to find me, pretty easy to do so.
All right. Well, Michelle Schneider, everybody, one of the best intermarket analysts that I know, and I know a few, and want to thank you for giving us your view and what we should be paying attention to.
Thank you so much, Dale. I hope you stay well. You look great.
Thank you. You do
Okay.
too, Mish.
Well, thank you. All right.
We're fans of you here. Everyone's a fan. I am. I root for you guys, and hope that 2024 is your best year ever, and not just in the markets.
Thank you so much.
All right. Michelle Schneider, everybody, follow her on X, and go to her website at marketgauge.com and check out what they have to offer. And that's going to be a wrap. Go
I
ahead,
just want to,
Michelle.
yeah, I just want to say thanks to Blake and Stelios as well, who put up my stuff every day on their site. So thank you for that, and then post it.
Okay. Yeah. They only put up quality content, so you shouldn't be surprised. So I'll pass it on. I don't think they're here, but I'll let them know you gave them some kudos.
Okay,
Thanks,
great.
Mish.
Thank
All
you,
right.
Dale. Take
Take it
care.
easy, Mish.
Thank everybody.
See you in the
Bye.
spring.
Yeah.
All right.
Bye.
Adios. Bye-bye. So don't just count your pips, count your blessings, everyone, and see you tomorrow to wrap it. Adios.